Namaste and a very warm welcome to our channel, Rusty Traders. In the stock markets, there are various market participants. Some of them are long-term traders or investors. Some of them are short-term traders. Some of them are day or intraday traders. Some of them are scalpers. Now, this video pertains to scalping. All right, there are a lot of ways to scalp, a lot of indicators out there. In this video, we are going to focus on how to use MACD to scalp, primarily in options. So as far as our videos go, we always take into consideration some practical examples and we try to understand the concept. So this is nothing different. It's on the same line. So we'll be taking a very recent example and we'll be trying to understand as to how we can use MACD to scalp in Nifty options. All right, so let's start. So today is the 5th of December. And this is a 15-minute chart starting at what 9:15. Yeah. So this is the market behavior on Friday, 3rd December. And this is a 15-minute chart. And what I have got is the 17,400 call option, same chart. And I'll just change it to 15 minutes and then we'll go about the same thing. So yeah, so this is it. And what we have here is same in the sense what we have is starting from here. Right, so let me put it here. Great. So this is 17,100 put option, same expiry, which is 9th of December. This is 17,400 call option. This is 17,100 put option. Okay, so let's start. So now how are things going to pan out here is we'll be focusing on MACD, a buy and a sell signal, and accordingly will take or close a position, rather take a position in the Nifty options, primarily on the selling side only. We are not going to buy options. We are only focusing on selling options. All right. So let's start. So, okay. So this is a 15-minute chart, 9:15. This is the MACD. And have we got anything on 9:15? Nothing. 9:30? Nothing. 9:45? Nothing. Nothing. And wow. At 10:15, MACD has given us a sell. So what I am going to do is I am going to initiate a short probably at the close of this candle, around somewhere around there. I am going to put, ideally the stop loss has to be at the swing high, and my sure short target, okay, sure short target is the low of this candle. All right, I am expecting a breach of this candle at some point in time before my stop loss gets taken out. All right, so my stop loss will be ideally here. I'm going to place it here because anyways the risk reward is not fabulous. It's highly skewed on the risk side. So as far as this strategy is concerned, it's not fantastic. As far as risk reward is concerned, sometimes it's great, sometimes it's not. So it depends on the market structure that happens, in a dynamic way. So at 10:15 on Friday, this is what I got. All right. So if you can see, this is the open, high, low, close for a particular candle. So if you can see, the close is at 17,376. The low is 17,351. All right. So what I'm going to do is I'm going to initiate a sell, right? So I'm basically expecting the market to go down. So what I'm going to choose is I'm going to choose to sell the call. All right. Make a note. I am not in favor of selling any naked options. I always hedge my positions. So you should also follow the same thing. But there are a lot of participants out there who choose to sell naked options, and probably they might go ahead with the same thing, right? So now let us understand what's how much money can the person make using this. So I'm initiating a sell here. Similarly, at that 10:15, all right, I'm at 10:15. Great. So now if you can see here again, open, high, low, close. All right. So at 10:15, open 141.15, high 141.55, low is 119.80, close is 130.6. So now we are assuming that we have initiated a short at the close, right? So 17,400 call, short initiated at 130.6. My target, at least, I mean, the amount of money that I'm at least expecting to make is 119.80, which is almost 11 rupees. That's sure short. The stop loss ideally has to be the swing high, which is quite far, 200 and what 2.5. So I'm going to place it around 204.5. But I just chose this because it's a relatively safer spot for me. So it's what I'll take it around 181. So 50 points to lose, 11 points to gain. It's not a fabulous risk reward, but it's a short thing. All right. So the idea here is that before my stop loss gets taken out, my target will get it. So that is the whole idea behind it. But you should always take a trade assuming that your stop loss is going to get taken out, so that you take your position size accordingly. All right. So Nifty size, the lot size is 50 rupees. Here I'm entering at 130. My stop loss is 180. Right. So 50. And if I'm taking one lot, I'm shorting one lot. 50 to 50, 2,500. Right. So if you are lost, if you are willing to take a hit of 10,000 on this trade, you should not short more than 4 lots. I understand, right, that you'll only be able to make 11 rupees, but the losses, all those things, I totally understand, right? But if you get carried away and compromise your position size, and if the stop loss gets taken out, the calamity or the problem could be disastrous, because remember, you are selling naked options. If you're hedging, yeah, you can obviously do things your way, because I generally use a short strangle and I keep on changing the strike price as the market moves along. So that's a different story. This is only for people who are selling naked options. So yeah, perfect. So this is what has happened. I've initiated a sell at 130 and I am waiting. All right, either for my stop loss to get taken out at above 180, 181, or my target is at least 119.80 rupees. Okay, so now I'm waiting, and yeah, great. And that's it. So now when it hit 119.55 at 12:15, now you have two choices: either to take your profits, because that was the profit that was anyways guaranteed. If there is a breakdown or not, we never know. So here, let's say if somebody waited, okay, on a particular day you got another what, 119, another 19 bucks. Now that's not the story every day, right? So you have to be very disciplined. Sometimes what happens, it hits 119 and then moves back a lot of times, but it's, as we all know, the market's all about probability. So I am anyways banking on making maybe a couple of points more, and so I'll maybe get out at 117, 115. That's it. So I've made 15 rupees, okay, into my lot size. Let's say we traded 4 lots as we discussed, right? So 200 into 15, it's 3,000 bucks. Not a bad thing for me. 10:15 to 12:15, 2 hours, 3,000. Not a bad thing. In a month's time, 60,000. Right now, there are a lot of trades that you can anyways go and do. All right, you've taken a 5-minute 15-minute chart. Now I'm just going to change this to 5 minutes. Okay, and we shall just see how this went by 5 minutes. Yeah. Okay, so now this is the 5-minute chart. I'm just going to squeeze it a bit. Yeah, great. So here is when we started. So I've got a sell at 9:45. Okay, on the 5-minute chart. So a 9:45 sell. A sell at 9:45. Perfect. Okay, 9:45 here. So 9:45. Yeah, perfect. So 9:45 sell here. My stop loss will be this swing high. Let me take it down. Yeah. Okay. So what is the price? It's closed at 170. What is the stop loss? It's around 202. I'm anyways expecting the market to go below 153 in probably a few minutes. Ideally, the whole idea is that before my stop loss gets taken out, my target will get hit. Now, what is my potential target? My potential target is the low of the particular candle wherein I took the trade. So my low here is 153.85. And I entered at 170. So that 16 rupees, 154 to 170 is a sure short thing for me. But my stop loss is what, 203. So 33 to lose and a sure shot 16 rupees to gain. Now we don't know if it could go down by another 50, 65, even 50 paise it could go down, but this is sure shot. So as the whole concept is about scalping, I'll just take this 17 bucks and I'll move out. In 5 minutes I made 17 bucks. But yeah, an important thing, if you see, you ended at 170, but in the immediate candle it went to 179. Okay, so and then it came down to 139, 140. Cool. A lot of things, go along with it. What happens is a lot of traders, when they initiate a sell using MAC, they hold their positions till the MAC gives them a buy. So the MAC gave a buy here. So till that time, they hold the position. So just for understanding, at 11.5, it gave a buy. So let's say if you initiated a short here at 170 and you waited till 11.5, okay? So it's what? It's at 140 rupees. So you could have made 30 rupees. We just because we were scalping, we took 154, exit at 154 and moved out. One needs to remember that MACD is a highly lagging indicator. Sometimes what happens is when this thing gives a buy, MACD is back to your original price, right? I mean, the option price is back to the price where you actually had entered. So this is not how I prefer doing, right? I've made 17 rupees, I move out. In this strategy, the risk reward is not favorable, but it's a highly probable trade. So, and I only work, if you ask me, I only work on the immediate candle. Once I'm looking out for the low of the candle wherein I entered, if it's a sell trade or a buy trade, whatever it is. Once I make money on the particular candle or the immediate candle, and I'm out. A lot of times I use RSI and moving averages also, but I prefer doing it this way. If you are scared of the risk reward thing, then you can choose a strike price which is very far or out of the money, and then take a trade, whatever seems comfortable to you. But this is how the structure works. Okay, we took a sell example. Let's take another buy example. So 11.5, you got a buy. Okay, so 11.5, 11.5, 11.5, I've got a buy. Great. So now if you've got a buy, what I'm going to do is I'm expecting the market to go up, and hence instead of selling a call, obviously we are expecting the market to go up, so we won't sell the call, we'll sell the put. Okay, so at 11.5, 5 minutes, 11.5 here. So I am selling the call at 54.85, and in the immediate my potential target is 54.40. It's not that fantastic, and hence I'm waiting for the immediate candle. In the immediate candle, what I got low was 51. Probably I'll get out at 52, 51.5. I'm not sure at what level, but I made 3 to 4 rupees. That's it for me, and I'm out of the trade. So just because it's a scalping trade, we are not a swing trader or a day trader. I got 3 rupees and I'm out. In 5 minutes, if I'm trading 4 lots or 10 lots, depending upon whatever quantity you're trading, it's fantastic for me, right? You are making 2 to 3 rupees on a 50 rupee trade. So obviously you're selling, and the return on investment might not be that fantastic compared to option buying, but then we are more worried about making money rather than how much money or return on investment. All right, we all know what theta does to the option premium. All right, so let's take another example. 11.55, again a sell. So what's the rate of Nifty? 1395. What's the swing high? Here is the high. You just focus here. So what's the high? It's 17405. So a few points above this will be my stop loss, and that is cash. We'll anyways focus on selling the call here because the market's going to go down, so we're going to sell the call 11.55, and my stop loss will be the potential high at 11.45. Okay, so 11.55 we here. Perfect. So 136 is the close. I'm initiating a short here. My stop loss will be a few pips high, about 145. So 146.25. So 147, 148, depending upon whatever is your risk profile. That's your stop loss. 136 is when you entered. 133.15 is a guaranteed profit for you. Then it could go down to 133 or 123 or 113. I don't know. But that 3 rupees for you is anyways locked. So what I'll do is I'll just wait for the upcoming candle to close at 5 minutes, and at 5 minutes thing closed, it went to 130.4. Now if you see, right, here you were able to get at 133. That was anyways your profit. I mean book profit. If you did not book it, if you waited for 123, 143, we don't know. See, if it came from 130.40 to 135.25, right? So you could have got out of 133, right? But then obviously it's the market. Sometimes you're greedy, it's good. Sometimes you're greedy, it's bad. So discipline is the key here. I was in the market only for 3 to 4 rupees. Probably I'll get it at 132, 133 even. So 5 minutes, 3 rupees, I'm out of the trade. Yeah, then the market obliged and then slowly it went down. This is only for people who are, positional in the sense that they know that is going to happen. Obviously, we don't only use MACD, we use RSI, we use moving averages, pivots, squeeze, a lot of other indicators, which we might cover in the upcoming videos. But this is the basic structure, right? As to how are we going to use MACD to scalp in Nifty options. All right. So one thing, obviously, remember, we are going to sell the options. We are never going to buy the options. We are going to use MACD confirmation to initiate a trade, and the exit will be at least equal to the lower high of the candle, depending on whatever trade we take. Either we are selling the call or selling the put. That particular profit is anyways booked for you. The risk reward is not at all fantastic in this particular strategy, but then the probability of making money is high, right? So I might lose 300 rupees. I mean, my stop loss could be, let's say, 50 points away, but I might only be able to make 3 to 4 rupees, right? And hence, you always have to have the stop loss, and hence you have to have a control on the position size. So it's very important. The thing is that, does this strategy work every time? Does the target get taken out always before the stop loss? No, it doesn't work that way. And hence, we had taken this particular example. Let's see. It happened very recently. So if you see here, on 2nd December 12:15, MAC gave us sell at 12:15. Okay. So it was at the level of 17297.7. Okay. So if it was me, I would initiate a sell on the call, whatever strike price, and my stop loss would have been the option price above this, whatever level. Okay. Now, if you can see, it just came to this particular level. So if you see, the stop loss just got taken out, and it did eventually come out to, at a level below 17297. It made a low of 17280.65. If you had placed a stop loss here, then yes, then you might have been saved, but I would have anyways placed it here. So it's not that you get saved every time. All right. So, and hence you have to place the stop loss, and hence accordingly you have to have a control on the position size. I don't wait for a lot of time, but if the stops are wide, I definitely control my position size. Okay. So on that note, I hope it has helped you. Any questions, you can put it in the comments section. Always remember that options are a very risky instrument. I personally do not recommend naked options, either buying or selling. Right, buying to anyways I never recommend. If you're selling options, it's good. If you're selling options and hedging them, it's fantastic. So just because we are the VIX is increasing and we might have some turbulent days in the days to come, it could be a wise decision to trim down your position size in options. Just see as to how does it work, and then take a call, because the movements could be very, very wide. Again, we are understanding this only using MACD, but ideally you should use a lot of other indicators to time the entry and exit. In my other videos, I've explained how to use MACD to time the entry and exit, and how to use RSI. I primarily use RSI to time my entry and exit, and back it up with squeeze and pivots. So I've explained it in my other videos. You might want to have a look before you jump into actual trading. If you are new to options trading, do not jump with actual money. Do a lot of paper trading for at least 300 to 400 days, back test the strategy, and then jump. You have just taken one day, and it's basic. Just because it's scalping, we are taking 2 to 3 candles and then moving out. Else, there has to be a substantial amount of stop loss, and there has to be a position size that fits your risk management. Without this, do not enter the stock markets, or do not enter the derivatives especially. All right. So on that note, thanks a lot for watching. As I said, if you have any queries or some inputs, you can draft it in the comment section. Do let us know as to if this video helped you in some or the other way. And see you with another indicator. Thanks a lot for watching. Please share and subscribe if this video has motivated or improved your trading methodology even by a percent or so. Thanks a lot. Have a great day. God bless.